Kiran Mazumdar Shaw has also joined in. Kiran, I expect you've been listening in to what Jayant Sinha has been saying, and his contention is you're not looking at the budget in the right way, because we are scaling back a little bit, but we are not entirely abandoning the welfare aspects. But scheme after scheme, the government seems to be lowering its outlay for 2023. Do you think more could have been done on the services side, on the MSME side, which has been hurting on the income front?
So, Uday, first and foremost, I think I'd like to start by saying that it's very commendable that the government has not indulged in populist measures, because that is one thing they ought to have done given the elections and what have you. And I think the way I look at it is that the finance minister and the ministry has been very prudent in terms of what needs to be done at a time like this, when we can't really assume that the worst is behind us. So at this point in time, I think we are back to 2019 levels of GDP growth. Of course, as I said, she's cautiously optimistic in the sense that she's laid out a roadmap which is very focused on the future, on the $5 trillion economy. And she's laid out, if I may say so, a very digitally enabled roadmap where she's focusing on digital health, digital education, a digital economy, so to speak. So, and I think the government has decided to invest in that digital economy to make ease of doing business a lot better. So sentiments are very positive from
that
the
point
economic
is taken.
growth.
My question is specifically about the demand side of the economy, because if incomes hurt, if jobs are not there, then you sometimes need to do something.
I agree with you that they have missed an opportunity for at least addressing some of the pain points that the informal sector and the MSMEs and the services sectors are facing right now. Because certainly I don't think anyone can deny that they've borne the worst of the pandemic impact. And I think, I was expecting the finance minister to at least talk about some relief in terms of allowances, at least for housing loans, for healthcare expenditure. But I don't think this is the way the government has thought about it. I think the government wants to open up the economy, revive the economy, get jobs back into this sector through, of course, as was being discussed, the infrastructure projects, according to me, and you rightly observed it, is not going to happen immediately. There is going to be a lag in terms of implementing and spending all this money. But having said that, I am a little optimistic, because I think if you open up the economy fast, now that we are fairly well vaccinated, then you're likely to be able to, brush off the kind of criticism that you're having in terms of reducing welfare.
My follow-up question to that, Kiran, is what happens to demand in the second half of the year? I mean, there's one view that because of the scarring at the bottom end of the pyramid, which we have not addressed in this budget adequately maybe, but we could see consumption demand start to get weaker. Do you think that is a legitimate fear, that we could see some waning of demand in the second half of this calendar?
No, I think that is a legitimate concern, because I think that unless we get the economy moving at all levels, right now it's the large formal sector that's driving growth. I mean, what you're seeing today, whether it's GST collections, whether it's the strong growth that we're seeing, it's driven by the large and formal sector. So I do believe that if you don't start, seeing the kind of inclusion of the other sectors, especially services, I think services is what is going to determine consumption. And I think if you bring back the economy, open up the economy, I for one believe the services sector is going to rebound. But any further lockdowns or delays, and this is all at a state level, if you remember. So unless we get the economy back in full flow, you have these legitimate concerns.
Kiran, thank you very much for your time. We'll let you go today. Very nice of you to join in today. But we've got more guests joining in to continue this analysis. We've got Naina Lal Kidwai, Ashok Wadhwa, and Rajiv Lal also joining in now. Ladies and gentlemen, thank you very much for joining in. Naina, let me start with you. As a former banker, I want to ask you about this digital rupee because, everybody's quite excited that the RBI will have a digital rupee. But are you clear how it will work? Will it be like almost legal tender, a currency that you can transact with?
I'm sure that's the intention, but we will be one of the first countries to take this forward, and as it should be, because we're really masters at everything digital. I would hope that we lead the charge, but it's very hard to understand by when it'll get implemented and by when it works as legal tender. And for that, we'll have to look at RBI. The finance minister was being pushed on this by some at the press conference she held, and she basically deferred to RBI. So we'll have to hear more about it. I think the relevant aspect here is that there is recognition that there is cryptocurrency. India has been slow to integrate globally into the cryptocurrency madness, if one might call it that. And I think the fact that it exists, that it will be taxed, are at least a step in the right direction, even as the stakeholder conversations happen on that. If I could just come in on some of the discussion on consumption and demand, and I share the concern there. NREGA's down 25%. Infrastructure projects, take 18 months to 2 years to actually play out. So what happens in the immediate term? And I think the good news here is in this one of the spaces I work in, which is sanitation and water, is there's a 67,000 plus budget, which has been set up for this year, as in the year 23. And that is almost 34% above what is already a large budget for the current year. And there's UNICEF study which showed that from 2014 to 2019, the Swachh Bharat mission, 75.5 lakh new jobs were created. So there's external endorsement that the delivery of public goods and expenditure by government on these programs does create jobs. And I'm really glad to see that that commitment is there, and hopefully it replaces what we're seeing as a decline in NREGA, and also maybe till we have catch up from the infrastructure sector. And within infrastructure, while we certainly need the roads and ports and big infrastructure, I'm hoping there's some amount that is committed to sewage treatment facilities, etc., which indeed might be bigger employers. So to look at all the programs at some stage through the lens of job creation, which in turn could lead to greater demand, particularly in rural India, which has been flagging. Green jobs too, by the way. That's something excellent the Prime Minister just mentioned.
Excellent point, Naina. And I just want to get Rajiv Lal to join in this discussion about infrastructure creating jobs. Rajiv, you've been in the sector for so many decades. Now, Naina just spoke about the fact that infrastructure jobs take 18 to 24 months to materialize. That's where the government is putting so much emphasis. What is your sense of the kind of infrastructure investment which this jump in capex will entail, and how many jobs or what kind of jobs it will end up creating?
See, if you recall the infrastructure boom in the second half of the first decade, from 2005 to 2010, that boom led to significant job creation, which came from the construction industry. So there was an absolute boom in the construction industry, which was led by infrastructure investment. At that time, infrastructure investment was led by the private sector. This time, what they're trying to do is to lead the capex cycle with public investment. So the jobs will be created through the construction industry. It is true that it will take some time. So what we have to watch very carefully is the execution capability of government to get this infrastructure public investment plan up and running. And what is actually critical about this plan, if you look into a little bit into the detail, a significant chunk has to come from spending through the states, and the states have constraints on execution capability and project management. So getting that machine up and running at the pace at which they want is going to be absolutely key for creating the jobs we need to be creating. But conceptually, public investment of this nature is the sustainable way of creating, hopefully, a virtuous cycle of growth. So public investment creates jobs in the construction industry, that in turn creates demand, that then kickstarts private investment, and then the cycle goes on from there. So that is the hope and bet, but we don't know yet how well it will play out.
Ashok, I was trying to talk to you earlier in the day but could not get through to you. Let me start by asking you about this crypto taxation, because it seems to have really kicked up quite a fuss, this 30% tax, the 1% TDS. Is it your view that it's penal, or do you think it's par for the course?
I think it's par for the course. I mean, if F&O transactions for the longest time have been treated as speculative trading and have been treated differently under law, nobody's objected to it. People have learned to pay tax on that. Why should cryptocurrencies and any gains made on cryptocurrency be treated differently? Perhaps the younger generation is unhappy with this because, many of us who were born post the birth of crypto, or who were born much before the birth of crypto, don't really deal with it. But let's think about it logically, right? They have said that the cost of acquisition will be allowed as a deduction. So it's not as if they're taxing you on gross revenue, they're taxing you on your gain. And if transfer of art and transfer of personal belongings and transfer of shares attracts gain, then why shouldn't crypto attract gains? In addition, they have applied a 1% TDS because they're jolly well aware that it will be a while before the regulatory framework is created to be able to track these transactions and create an audit trail. So by creating a TDS, they have made sure that there is reporting and the onus is on the payer, and therefore the payer will always take a conservative view, deduct the tax, and create the audit trail. So honestly, I mean, one can argue and say, is 30% the right rate? And somebody will say, but am I not paying 45% tax if I sell an unlisted share in a company in less than 2 years? Honestly, I think it's par for the course.
Right. Well, I was just asking Naina about the digital rupee, and we are all looking to the RBI to see what shape and form it takes. But being an observer of how these things work, what is your expectation of what the digital rupee will be?
Sorry, Udyan?
Ashok?
Yes, sorry. I mean, my own view is, I think we need to look at this thing, as Naina said, first positively. Even while the cryptocurrency law is being developed, to me, the preamble has already been set. And the preamble is that India is going to be amongst the first countries. We've been first in many other respects in the digitization process. India is going to be amongst the first countries that is hopefully going to introduce and legitimize this concept of cryptocurrency. I think the finance minister also said that it's going to be on the blockchain basis. Honestly, at this point of time, and perhaps again, lack of knowledge could be one reason for that. I cannot exactly fathom on what sort of currency this would be, how it would get traded, what sort of exchange will be needed for that, and more important, what sort of framework will be needed to make sure that something which is all on the cloud or in digital format can also be traced, collated, accepted, and transacted. So honestly, it's beyond my qualification, I have to say that. Maybe Rajiv probably has a better understanding of it than I have.
Let's leave it to a break. We'll come back and continue our discussion. Many more experts waiting to join us. We shall be back in a minute.